Hey everybody, good morning, good afternoon, good evening, wherever you are in the world. I'm here to do a real quick update on the S&P 500 using VIX, trying to find significant tops on the S&P 500 using a process that has been tried and true over and over again, finding these significant tops in the stock market. And what I'd like to do is get into that. I do this about once a year. The last time I did this was last December, and really it's similar content, but it's going to be relatable to what the market looks like today. Before I get into all of this, as you all know, it's not financial advice. I'm not your financial advisor. You're responsible for your own trades, managing your own risk, doing your own research. And as always, this is just my opinion on the market. So let's go ahead and move on into the chart. The last time I did this was, again, it was probably December of 2024. So let's go ahead and rewind to December of 2024. It was, right in this area I was talking about caution, right? We had a little bit of a drop here. We went to new highs. We were creating divergence with the volatility index, and I'll talk about that a little bit. And then, of course, what we saw from February all the way through the beginning of April, we saw a 21% drop in the S&P 500. Pretty significant drop if you ask me. And what we're looking for is that divergence. And so what we're again looking for now is the fact that we have a very similar setup to what the S&P 500 looked like, basically a year ago, right? Going into the end of 2024 into the beginning of 2025. Now here we are at the end of 2025 and moving into the beginning of 2026. Now, of course, I do expect that there is likely going to be some new highs that are going to be occurring in the S&P 500 going into the end of the year, maybe even the beginning of 2026. But we are starting to create a very similar scenario from what we did again a year ago. So I want to take a look at that. So first things first, let's go ahead and zoom into what the market looks like right now. We've got a pretty significant low here in the volatility index. It was all the way down here at about 14. And it's just creeping its way up little by little by little. It's creating higher lows. And higher lows mean that the volatility index is a little bit higher. We're expecting more shorter term volatility, at least over the next 30 days as time goes by. And so then, of course, what we're seeing with the stock market is, we have our basically our low here. We are moving up higher, and this creates a low, right? And then we're creating higher high after higher high after higher high. And on each one of these points, let me just go ahead and, kind of mark these out for you. I'm just going to do our little target symbol here. We've got basically a high here, and then we're creating another high roughly around right here. We'll put it right there. And another high, which was right here. And we have another high here. We have another high that just happened just a couple weeks ago. And each time we get one of these highs, we're creating really a higher low. We're creating a higher low, higher low, higher low, higher low in terms of the volatility index. And all of these things put together is really a sign or a warning, if you will, that there is a more significant drop that is brewing. But just, a couple things that I do want to point out is this is just one of those pieces of the recipe. Okay, so right now what we have is we have got significant divergence, right? We've got, a higher low here on the volatility index, while the S&P 500 was making a pretty significantly higher high. Right, we were at about 2.41% higher than we were back here at the beginning of October. So over a month's time, even though we had a pretty steep drop over the course of just a day, 3.19% drop from that high, we saw, a significant move to the upside. Now that we've had that, let's just take a look at see what happened on Friday. A pretty significant bullish hammer on the S&P 500. So that kind of leads me to believe that we are going to be seeing movement to the upside. But the second part of this recipe is what we need to focus on, and that is a 30-minute time frame, 250 period moving average. So what we had last week, this would have been the perfect time to take a short. I totally missed it. I missed this, and from there we had about a 126 point move to the downside. That's not really the significant like the significant top that we're looking for. We're looking for, consistent, movement below this 250 period moving average on the 30-minute time frame, and sustained movement below it. Today would have been the perfect time to take a short position, but we are above this 30-minute 250 period moving average. We need to kind of stay below that. If we can close below this, I think this is a good opportunity to take a longer term short position. And when I say that, how long do these things take, really? If we take a look and see what happened back here, from this high to this low, it took about a month, or actually a little more than that, 47 days. So it's a pretty significant amount of time it would take. Like from this top right here, looking 47 days out, what we're looking at is, about the middle of December. Are we going to get a drop into the end of the year? We're just going to have to kind of take that one day at a time. But again, what we're looking at is this 250 period, 30-minute moving average. If we can get back below this, then I would say, puts or some kind of a hedge position going into the end of the year, maybe even into mid-January, probably will end up paying pretty well. As far as, where am I looking at from like a downside perspective, I'm not going to speculate too much here, but what I will do is kind of take a little bit of a measurement from this high to this low, taking a look at this pullback. We went to the 618. That's a pretty good area to be looking to go short if you want to be bearish, even if it's short term. And so what would that target be for the downside? Let's just go ahead and take this. We'd be taking a look at a move down here to about 65.60 or so. That's going to be the target for a 618 pullback. But are we going to go any lower than that? That's really to be determined if we're going to go ahead and measure this, right? So we have this high, this low, and then we get this pullback here. If we're going to go much lower, then yeah, I would say that this 63.43, 63.50, we'll call it, is likely going to be the bottom, right? Very similar to what we did see, by the way, back in early 2025. We came down here to this 1618 pretty well, if my memory serves me right. Let's just go ahead and move on back to this and see what happened going into, again, we broke that the 250 on the 30, and we had a nice pullback, and then we saw, this movement up here. And if I remember right, we saw a nice move. We went to the 1236. We did not quite get to the 1618, but I think futures may have actually gotten there. But we're taking a look at a movement down here. And again, from a percentage standpoint, that was about 21% drop. And if we go forward to what the market is at right now, if we're taking a look at that move down close to the 1618, let me go ahead and squeeze this in here. What would that equate to, right? We'd be taking a look at, roughly an 8.3% drop. And that, of course, is a lot less than the 20-some% that we had. But after we have a pullback like we did at the beginning of 2025, I don't know that we can reasonably expect that the pullback that we're going to receive is going to be as significant as it was earlier in the year. We will have some 20% pullbacks in the future. I don't know that this is the time period that it's going to happen. But so long as we stay below the 618, and especially if we get back below this 250 simple moving average on the 30-minute time frame, the divergence that we have created on the VIX compared to the S&P 500, creating again new highs, that I think that we have a recipe that we can come back down here to the the 6350, 6400 area. What I would be looking at is hedge type positions instead of like really aggressive short positions, because anything can happen. And ultimately at the end of the day, what we do want to do is be looking for longs, right? We want to be looking for opportunities to buy instead of betting against the market, because generally speaking, the market recovers for a number of reasons that I'm not going to get into here. But these are the things to look for. These are strategies that have worked and that have yielded really great results over the last several years. And so this is what I wanted to kind of bring up today. And again, what we might see a move back to new highs, creating further divergence, right? We're going to continue monitoring the volatility index at, if we do make new highs, to see that we're consistently creating this divergence. But ultimately, right now we have a recipe in the making for a move to come down. But that, again, doesn't mean that you should go all in on any shorts or anything like that. Be reasonable, be diligent, and be willing to adjust just in case the market doesn't do what it looks like it wants to do. And it looks like it wants to drop. But if the government opens, that's going to be a significant door that opens to have the markets move to new highs. Right? If we get that vote, then we are going to likely be going to new highs. But I do think that it's probably going to be short-lived, and we'll probably see that pullback. But this is what I'm looking at right now. If we do see a vote come through and it's negative and the government doesn't open, yeah, you can believe that we're going to be coming down to that 63 to 6,400 area, probably quicker than you would expect. And I would be looking for something like that to happen, over basically the next month. So it's probably going to take some time. But that's really what I am looking at there. I did just get a request to take a look at URA. So what I'm going to go ahead and do is I'm going to go ahead and end this here on the S&P 500. It's November 10th, 2025, and I have a comment here asking for a request. So I'm going to go ahead and take that request. Let me go ahead and get things moving over here so that I can pull this up. While I'm doing this, of course, if you'd like to have access to our Discord or any of that information, you can find all of that information on BitDoctor.org. If you need access to Discord, if you need access to me, if you need access to any of our services, you can find all of that information on BitDoctor.org. Okay, so the request that I've got is to take a look at URA, which is uranium. I think that actually what has completed here, it actually looks pretty good for a nice ABC correction. So I wouldn't be getting too bearish on much as far as uranium goes right now. If I go to a weekly time frame, just kind of taking a look at that, it really doesn't look that bad. It looks like it wants to create a little bit of a pullback, but it's still kind of in the bullish control zone. So let me just go ahead and do some measurements here, getting all of the history here. I want to take a look at these splits, 1 to 3 and 1 to 2. Okay, so yeah, we've got that to take a look at here. But if I'm looking at this low to this high, and where did we pull back to? We came right back to the 382. That alone is a sign of strength. So then let's go ahead and measure this and see where we might be looking to land. So we're right here at about 48.35 with the high recently at about 60. I would say to probably look for a move to about $80 on this. So I've done this measurement here. Let me go ahead and measure this. And that goes to the 1618. Let me see if I can put the 2618 on here and see where that will land and see if there's any confluence. No, I don't see any confluence there. That move to 108, that's pretty high up there. I would be looking more towards that $80 mark, and then wait to see if that actually happens, and then we can start talking about a move to about 100. But on the daily, honestly, the correction that happened right here, it looks very clean from like an Elliott wave perspective. Nice ABC correction there, just like we saw a nice clean ABC correction right here. So this is something that you should really keep an eye out for, and that will kind of tell you where the next move might be. So really, as long as it stays above 44.52, right? And let's go ahead and throw an actual trade on this. So as long as it stays above 44.52, which again is about an 8% drop, but we again would be looking for a move up to this 100, which would be about $80. So you'd be looking at about a 65% trade for about 8% risk. That's an 8-to-1 ratio. That is not a bad trade to take. That's something that is worth the risk, in my opinion. Looking on the daily, it looks like the daily is pretty oversold. So if we can start to see that, start to curl and move up to the upside, you might see price action come back down here into like the maybe the mid to upper 40s. So maybe down here about 46.50. That might happen if I go down to like an hourly time frame. Taking a look at this, yeah, of course the wave master indicator is saying like buy, buy, buy. But if we see a little bit more of a pullback, be looking for a move, and well, right there, it bounced off the 382, but down here at about 47.24, 46.50, that would be a good area if you're able to kind of pull that back a little bit, maybe get at 47.25. Now we're talking about, an even better risk to reward ratio. Instead of an 8% trade, you're talking about 5.74, and your upside is going to be a little bit better. But if you wanted to get in now, of course, that trade really kind of looks like, basically an 8.5 to 1, a 7.86% risk. And of course, we already mentioned that the upside's, what did I say, about 60 to 70%. Move to the upside, 66%, 66.5. So again, not a bad trade. That might be something that you would be interested in taking. Looking at the hourly looks pretty good. WaveMaster called the bottom here, and we saw a nice move to the upside there. That was about a 23% trade. And then, of course, WaveMaster called in this general area, and right now it's up about 6% from there. But, after an ABC correction, it looks like it does want to continue moving to the upside. So as long as we stay above that level again at about 44.50, I'd say that the trade actually looks pretty good for some upside. So that's my thought on uranium. And hopefully that helped. And I'm going to go ahead and close things out here. So thanks all for joining. I really appreciate it. If you have any questions, again, you can find me on Discord. If you need access to Discord, you can find all the information on BitDoctor.org. You can send me a DM on Discord or an X or anything to get access to our services. And last but not least, wherever you are in the world, I hope you're having a great day, a great night, and a great evening. Take care, everyone.